Hey guys, what's going on? Just want to do a quick analysis here on Algorand. Ticker for this is Algo. And right now, what you're looking at is the weekly time frame. Couple things before I get into it though. First, if you're not subscribed and you want to get notified when I release new content, just click subscribe, click the bell, click on all. And if you want a place to trade this, you can head over here. This is one of the only centralized exchanges that's not currently requiring their users to submit their personal information. So as of right now, there's no KYC. And yeah, I'll put a link to this in the pinned comment or description if you're looking for a place to trade. I'll also link a couple others if you don't mind going through KYC and you want to get some sign-up bonuses. All right, so I covered Algo last week, I believe. So I'm not going to go into every little detail. I just want to point something out here. And what I want to show you is that we are currently at the lower region of this particular range, right? So I'm on a weekly time frame, as I mentioned. And if you want to mark this on your chart, you can just take a horizontal array and place it right at the top of all these candle bodies right here. So since this area was resistance for about a month and a half right here, it's quite probable that it's going to be a support, right? So I have this region marked at around 11 cents, so 0.1170. And the upper region of this range is going to be right up here. Now, this is a very, very important area to mark down on your chart if you want to trade algo, and just take a horizontal array and look for the low of these candle bodies and just paste it right there. Okay, so you see this region was support all throughout here. We broke below it. It was resistance here, and it was resistance once again right here. Okay, so you can consider the price right now being at the bottom of this range. If we breach this level that I just mentioned, next level down from that is going to be right around here. I would say right at the low of this candle body cluster, and that's going to be around 10 cents, so 0.1089. So you can mark that on your chart if you want to. And then beyond that, obviously you have the lows down here. I honestly don't think we're going to make it there. Reason being is because we're already showing some signs that we're going to turn around this region. Okay, so I'm going to take this down to the daily time frame. And what I want to point out is you see here on the price we have a low and then we put in a lower low in relation to this. So I'll just mark that so you can see what I'm talking about. So the low right here and then a lower low there. Well, if I expand my indicators here, I'll get rid of this one. Yeah, we have a bullish divergence forming here on the daily time frame, right? So low, then a lower low on the price, and then a low, then a higher low on this RSI indicator. Also, a bullish sign is this candle right here. This is a very bullish candle. So you have the long wick all the way down. Buyer stepped in, bought it all back up. And yeah, it's common to see these types of candles on a reversal. So right now, everything's kind of lining up with the price in relation to the indicators here on the daily time frame. So right now, I'm on the 4-hour, and let's take a look at where I would personally be looking to get in. All right, I'll get rid of what I was showing you here with the divergence. And this time I'll take a trend line and I'll connect from the top here, run it down just like that. So here on a 4-hour time frame, you may want to draw that on your chart as well. And then what to watch for is candle body starting to close above this downsloping level of resistance. When that happens, I would anticipate a move up to around this potential resistance region right here at around 14 cents, so 0.1442. Okay, so right up here would give you a pretty decent scalp opportunity with what should be a pretty good R&R, meaning you can place a stop loss just below here and then you can target up here for the first take profit. Next level up from there would obviously be right at the top of the candle bodies right here at around 15 cents. And then, yeah, if it is going up, you can just trail your stop loss up along with it, right? So if you do get a pullback, you're going to get stopped out in profit anyway. Okay, I want to zoom out and I want to show you one thing, like what the significance is with this particular level and why we keep getting rejected there. So I'll take a Fibonacci retracement. I'll run it from the top, drag it down to the low here. And if you look at this, this is where the 382 Fibonacci retracement level is. And here you see this is the significant level weekly time frame based on the price, but this is based on the close of the candle bodies. So you see right here and back here in February of 2023, we traded above it, but by the time the candle closed, sellers came in, sold it off, and this just ended up being a wick. Same story right here. And recently, same thing happened. We came all the way up to this 382 retracement, and that's where obviously some big players were waiting with the short position, sold it all the way back down. Candle body closed back below this established resistance region, and then from there we just dumped all the way back down to the bottom of the range here. Okay, so yeah, that should give you some interesting potential trade setups with the price being all the way back near the range lows. Obviously, if you wanted to take kind of like a midterm position around this region here, you can target back up at the top of the range at around 27 cents. So even when entering where we are right now, and if I place my stop loss all the way back below this wick down here, which I believe is the all-time low, even taking that trade gets you a 1 to 2 risk reward ratio, meaning you would risk 45% of the position on this trade in order to get over 96% profit to the upside if we come back to the range high. So obviously that's a big risk, but the reward is still double the risk. But the chance of coming up here to the range high, I believe, is a lot higher than coming all the way back down and breaking the all-time low. Okay, so something to consider. Anyway, that's basically just what I wanted to show you. I'll keep it short today. If you found it helpful, smash the like button. If you're not subscribed and you want to get notified when I release new videos, just click subscribe, click the bell, click on all. And again, if you want to please do trade this with no KYC and also get a sign-up bonus, you can check out the links in the pinned comment and description. All right, guys, take care. Have a good day. Bye.